Hey everyone, this is John White here with you. It's good to be out with you here today. What we're going to cover today is a little bit about some non-directional types of strategies that I like to use. Some of you that have spent any time around me or with me know that all of my trading is based on these non-directional types of strategies, because we all know that the market can be very unpredictable and we really don't know where it might be going tomorrow or next month or next year. So I like to trade these types of positions where even if we're incorrect about where the market goes in the future, we can still have a good chance at making a profit on the trade. This is one such strategy here with this iron condor, and although there's a lot of information to learn about these types of trades, I want to just sort of try to cover the basics, hit the big points, and give you a good idea of how I trade these things. If we look at the market here on this particular day, we see that it was trading around 1172 or so. We don't have to get it right down to the penny, but it was around 1172. And what we did here for August for this particular trade is we came up here and we sold a call credit spread. That means we're going to sell a spread and be paid a premium or be paid a credit for that trade. And what we did here is we sold to open a 1260 call option, and when we sell that call option we receive a certain amount of premium for that. And then what we also did in this call spread trade is we bought to open a 1270 call option, which is our insurance option to keep ourselves covered on the upside. And this call spread that we sold up here generated a credit of 70 cents. So that 70 cents credit, we get paid that as soon as we enter the trade. And all that needs to happen here is that the market needs to stay below 1260. It doesn't really matter to me if the market goes down over the next month, if it goes sideways over the next month, or even over the course of the next month if the market goes up. I'm really not concerned with where the market goes. As long as the market stays below 1260, that call spread will expire and I'll get to keep that 70 cents credit. Right? That's about a 7.5–8% return on that one particular trade. Now, something I also like to do is come down below the market and sell a second credit spread, and this is going to be a put spread that we're selling here. And what we did here is we sold the 1050 put option, which is right there, and we received a certain amount of premium for that option when we sold it. And then we also bought to open the 1040 put option as their insurance for the downside. And this put spread that we sold here also generated a credit of 70 cents. So when I sell this put spread, just like the call spread, my goal is for the spread that I sold to expire out of the money worthless. And all that needs to happen here to accomplish that is that the market needs to stay above 1050. So as we can see here, the market started at about 1172 or so, and it came down, it went sideways, came down, went up a little, went down some more, then up. And this second vertical line you see here is expiration day for August. And when the market expired over here at about 1145 or so, right in this area, when the market expired over there in that area, both of my credit spreads that make up this iron condor expired out of the money worthless. So what I got to keep from this trade was that $1.40 credit, the 70 cents on each side, that I generated when the trade was first set up. So as you can see here, I'm not really trying to guess where the market's going to go over the course of the trade. I'm not really trying to anticipate what the market might do for its next move. I'm really not concerned about that. If the market goes up, I'm fine with that. If the market goes down, I'm fine with that. If the market goes sideways, I definitely have no problem with that, as long as the market stays below 1260 and above 1050. All right, folks, this is just one example of non-directional trading. This is the kind of trading I love. I really like the freedom it gives me in my trading, where I don't have to sit and watch the market all day long. So it's a really, really cool way to trade. I look forward to working with some of you all in the future in learning this type of trading. Everyone take care. Bye-bye.